This is the briefing for Friday, December 15th. I'm going to take a little bit of time this evening to go through the fractal nature of the markets, and I'm going to make a statement that I think I've said several times before, is that the markets spend most of their time in rotation. It just depends on the time frame that you're looking at. Rotation in one time frame could be vertical development in another time frame, and that's pretty much explained right here. This is a weekly chart of the spiders. Now, this is the high going back to, this high was in January of 2022. So you can see that going back basically all the way back to this date here, which is 11/13 of 2020, that the spiders have been in a rotational pattern ever since that time. Testing the bottom on October of last year, I should say the lower extreme, and then rotating since that time all the way up to test the upper extreme, which comes in right around the 480 area in the spiders. So you can see that rotational nature. Now, the real question facing us is, looking at this in a fractal time frame, is what is happening right here. Now, I'm going to get to that in a second. But let's just talk about this rally here. Now, this rally was basically beginning on diverging volume, and it looked very, very weak. Then, of course, we started getting weaker breadth as well, which suggested that the rally was suspect as it came into this 460 area. This week, we had a news event that certainly strengthened the market and suggested that we were going to see a potential for a breakout move outside of this area of rotation and a potential test of this 480 resistance area, which certainly is still a possibility. Now, we do have volume increasing in terms of the last 3 weeks. We have breadth that's decreasing in terms of the last 3 weeks. But if I drop this down now one time frame into a daily time frame, this is the area that I showed just a minute ago, going back to the weekly area. This area right here, this rotational period right through here, that is on a daily chart, this whole area right through here. So you can see that we've rotated all the way up to the 460 area, back down to 410, then back up to 460, paused at 460 for several days, and then, of course, had a breakout move. This was the breakout move on Wednesday after the FOMC announcement. Then a little bit of follow through in yesterday's trading, and then, of course, a continuation of a pause in today's trading. Now, speaking of Wednesday's move, it was a strong move internally. I can't deny that. You can see volume increased and continued to increase in today's trading. I should say yesterday's trading, and a little bit flat to slightly higher in today's trading. Now, the real key here is you can see this is S&P breadth. So about 80%, better than 80% of the stocks in the S&P were trading higher as opposed to lower. But since then, you can see that it has declined, and declined pretty dramatically, to where we're about 50% of the stocks are trading lower as opposed to higher. So the last 2 days, while Wednesday was a very strong day internally, the last 2 days have been seen a weakening in the internals, which suggests that the rally may be fizzling as it comes into this key reference area. Now, I want to point something out here because I think this is important. When we hit 410, this goes all the way back to September, end of September of this year. When we hit 410, the higher probability was for rotation. Now, we were looking for, I should say, I was looking for a breakout to the downside. I just felt like there were other outside factors that would suggest a breakout to the downside. It did not occur. The higher probability is always rotation. When we reached this area here, I felt like the higher probability was that we were going to break out to the upside, which is exactly what we did. But now that we've broken out, the question is this a false breakout, or are we going to extend these gains? So important to that is this 460 level. That now is support, and that is just very, very critical. The key here was that we had such a strong day on Wednesday from an internal perspective that I believe that this is a pause to work off what was a slightly overbought condition, and that potentially we're going to see follow through in Monday's trading, or at least in trading of next week. So watch what happens, especially at 460. Keep in mind that upside resistance on a longer term basis is 480. So we certainly have the ability to test 480, but then watch what happens there, because we could get that longer term development of rotation back through this range once again. So keep in mind, this is one time frame of rotation. This is another time frame of rotation. So we've broken out of this time frame and now testing this time frame. Very, very important key reference area in terms of the spiders. The same thing with the Qs or the NASDAQ. You can see the rotational pattern that we've been in. This is the daily pattern that we've been in. Now the Qs are now testing this 410 area, which is the upside resistance in the Qs. So this is going to be very, very important. Now volumes increasing on a weekly basis in the Qs, breadth decreasing over the last few days, mainly because of the slightly overbought situation. But it's going to be very important to see if the Qs can break through this 410 area. Now keep in mind, this is the area that we're going to look at now on a daily basis. So you can see on a daily basis, this is the rotational pattern that the Qs have been in, with a pause right at this upper extreme and now breaking out and appearing to want to test the upside resistance at 410 on a weekly chart. Volume increasing over the last couple days, breadth decreasing. I'm not real concerned about that right now because it's not really at a negative. But if it were to continue on higher prices, then that would then suggest that potentially we are looking at a false breakout and rotation back through the range. The Russell on a weekly basis, you can see this rotational pattern here. This goes all the way back beginning in April of last year. So you can see the rotational pattern that occurs right at 200. This is the upper extreme. You can see we touched it this week and then backed off from it. And you can see this is just a very, very important key reference area. Next upside resistance is going to come in about 214. And then, of course, above that is going to be this high, which comes in right around the high is at 244.46. So I'm watching the Russell very, very carefully, and especially if it begins to break out above that 200 level. Let's look at the daily chart on it, and you can see this is the daily chart. We had a little bit of a false breakout, and then this rotation all the way back down, or all the way back up, I should say. Wednesday's trading, the gap up on Thursday, and then today's trading within the range of yesterday. Testing 200, not being able to get through it as of yet. Volume exploding on the Russell on Wednesday as it did in the other indices, and of course Russell breadth declining. Now the reason for that decline is, one potential is that we were a point of being overbought on Wednesday. It was such a strong day, we had to be overbought. So that pause that we've seen for the last couple days, I'm going to go back to the spiders here for just a second. So this pause on a daily basis right through here, or I'm sorry, right here, this pause that we've seen, Wednesday was a pretty much of brought us to a point of being overbought. Then we had slightly higher prices, but it was really a pause. It was a day where there was a selling tail, buying tail. Neither buyers nor sellers could gain control. Today was slightly lower. So that's a pause to work off some of this overbought condition that we've seen, that we are experiencing right now. So then that would then suggest the potential, because of the characteristics of a counter trend rotation, that typically they happen on lower volume. Typically they work off an overbought or oversold condition. very quickly, and there's not much price appreciation or depreciation depending on the degree of the pause, and that's exactly what we're seeing right now in the spiders, the Qs, and in the Russell. The other important aspect here now, this was key in yesterday's briefing. I talked about it. This is 52-week highs minus 52-week lows, and it really exploded. I think the high here was, let's see if we can get that. The high was 769. Now you can, just looking at the chart, you can see where the level is. It's just above this top line here. We really have not seen that in years. It's been quite a long time since we've seen 52-week highs minus 52-week lows at that extreme. Also, looking at where we are in terms of the percentage of stocks above the 50-day or 200-day moving average, look at the explosion that we've had. This market has been strengthening over this part of the rally, and I've talked about that in several of the briefings. So you can see that we've reached a point of an extreme where we really haven't seen that in going back quite some time above the 50-day moving average. This is for the S&P 200-day moving average. You can see over 71% of stocks are trading above their 200-day moving average. This is just very, very strong information at this point in time. In the Nasdaq, we're looking at 70% above the 50-day, about 53% above the 200-day, and in the Russell, we're looking at 82.63% above the 50-day moving average and almost 60% above the 200-day moving average. So basically, while this has the possibility of being a false breakout, and I want to qualify that for a second. If you have a probability assessment of the market going up or the market going down, you have to base your strategy based on that probability assessment. And that assessment, the way I see it today, is that we've broken out as a very strong breakout. The internals are definitely confirming that breakout, at least at this point in time. We reached a point of being overbought after Wednesday's trading, and we're working off that overbought condition. Whether the working off of that condition is complete or not is yet to be determined, but we have definitely broken out on strong internals. That tells me there's a higher probability that we're going to see follow through, a test of the weekly upper extremes that I've just shown you, and then potentially a vertical development breakout of that weekly chart, which would be a substantial move in the stock indices. The lower probability is that this is a false breakout, and potentially we're going to see rotation back through the range and a test of the breakout point, which is typical in a breakout, that a stock or a financial instrument will break out and then retest the breakout point before it reverses then, and then there's a dramatic move higher or lower depending on the direction of the trend. So I'm not excluding the fact that we could see another rotation back down to test the breakout point, but certainly I'm going to be watching the internals, and you should be watching the internals very, very carefully, especially if we see a move above yesterday's high or a move below today's low. Those are the areas that we need to watch very carefully. A break above yesterday's high on strengthening internals is going to confirm that this breakout is real. A break below today's low with the internals confirming that it's weakening is going to suggest a potential test of this 460 area in the spiders, or lower support in the other indices as well. So right now, in summary, it was a strong breakout. I think the market is probably going to have additional follow through after we work off potentially more of this overbought condition. But we could see pause on Monday and Tuesday. But then again, I would expect to see follow through to the upside. Unless, of course, we break today's low, that would signal something else is happening. And if we break today's high, that would signal that potentially the breakout move is continuing. Now, The other thing that's happening is next week is the week before Christmas holidays, and typically that's a very low volume week. So we saw really just muted trading today. We may see muted trading next week as well, and the week after, which is the week between Christmas and New Year's, could be a very slow week in terms of trading as well. So just be cautious, especially with the fact that we will see potentially lower volumes going into the end of next week. And certainly that allows for the market to be jerked in one direction or another. Barring any unforeseen news event that we just don't have right now, I think that we have to be in bullish mode, and this market is potentially headed substantially higher, especially if the spiders can break above that 480 level. Have a great weekend, and I'll pick this back up on Monday for subscribers.